Inflation, like a relentless storm, seems to be making itself at home in our lives. The latest figures show that U.S. consumer prices surged by a staggering 0.6% in August, marking the most substantial increase in 14 months, mainly driven by skyrocketing oil prices. Yet, this inflationary tempest is not as ominous as it may seem at first glance. When we peel away the volatile layers of energy and food prices, the core inflation, a better predictor of future trends, shows a more tempered rise of 0.3%. Still, it's enough to cast a shadow over financial markets. So, what does this dance of numbers mean for our financial future? Are we on the cusp of an economic downturn, or can we expect these turbulent times to settle into a more manageable rhythm? Let's dive into the heart of these statistics to understand the real story behind the headlines. Welcome to Global Economic Drops, where we bring you simple summaries of important daily and weekly economic news from around the world. Our mission is to simplify the economy and help you navigate the treacherous waters facing investors today. So before we get into today's videos, hit that subscribe button and turn on post notifications by clicking the bell icon. And if you find our news briefs valuable, don't forget to hit the like button. Leave a comment down below telling us just what you think is going on with the state of the world, and share this video with a friend or two so that you can all stay updated together. Thanks for watching, and now let's dive into it. Inflation has become the unwelcome guest that just won't leave with you. Consumer prices soaring 0.6% in August, primarily due to surging oil prices. This marks the most substantial monthly increase in 14 months. However, before panic sets in, it's crucial to sift through the data. When we strip away the volatile components of energy and food prices, what economists refer to as core inflation, the picture changes. In August, core inflation inched up by 0.3%, a tad above Wall Street's expectations. It's worth noting that the core rate had risen at a slower pace, just 0.2% in the preceding 2 months. The annual rate of overall inflation climbed to 3.7% in August, from 3.2% in July, which was a 27-month low. In contrast, the annual rate of core inflation decelerated to 4.3% from 4.7%, reaching its lowest point in 22 months. The Federal Reserve tends to rely on core inflation as a more accurate predictor of future trends, given the volatility of energy and food prices. So, what do these numbers mean for the Fed's next move? It's unlikely that the August inflation report will prompt immediate action from the central bank during its upcoming meeting. Most experts predict the Fed will maintain its current interest rates, with some even suggesting that it might be done raising them altogether. In its bid to combat inflation, the Federal Reserve had significantly increased its benchmark rate, elevating it from near zero to 5.25% in the span of a year and a half. Now, the central bank's focus is on slowing inflation while avoiding tipping the economy into a recession. Fed officials currently believe that inflation will continue to decrease, moving closer to their target of 2%. However, they remain cautious, as pushing too hard on the brakes could lead to an economic downturn. Gasoline prices were a significant driver of the August CPI increase, surging by almost 11%. They accounted for more than half of the overall CPI increase. Conversely, food prices rose modestly by 0.2%, a relief compared to the rapid increases seen in 2022. The cost of shelter, the most significant expense for most households, increased by 0.3%. While it has been a key contributor to recent inflation, experts believe that shelter prices will gradually ease, helping to lower the inflation rate in the coming months. Looking beyond these numbers, there are some interesting observations in the report. Airline fares, for instance, climbed nearly 5% after 4 consecutive declines, contributing to the elevated core CPI reading. Additionally, the cost of auto insurance, new cars, trucks, and home furnishings increased in August, while prices for used vehicles and hotel rates declined. In conclusion, the inflation story is far from over, but there are signs that it might be moving in the right direction. Inflation, based on the Fed's preferred core measure, is still more than double the target rate of 2%. However, this might be enough to keep the Fed from raising interest rates further, at least for now. The path ahead remains uncertain. A backslide in key areas could force the Fed's hand once more. So here's the question. Are we witnessing the calm before the storm, or can we finally expect some economic stability in the face of this persistent inflation? What's your take on the current state of the economy and the Fed's role in taming inflation? Share your thoughts in the comments section below, and remember to subscribe to the channel to stay up to date on global economic news. See you on the next video, and please like and share if you enjoy our content.